Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel we review stock markets and discuss financial news, market trends and economic data from Wall Street to Global Street. So let's get started. Wall Street indices registered their first weekly gains amid growing confidence among investors about rate path. Blowout earnings from leading banks and brokerage houses on Wall Street also supported the market's advance. In addition, benchmark indices in Germany and the UK closed at record highs despite weak economic output. Investors bid up stocks in New York after monthly core consumer price inflation and overall producer price inflation weakened, raising hopes that inflationary forces are likely to weaken further in the months ahead, setting the stage for the Federal Reserve to deliver possibly additional rate cuts. Consumer price inflation accelerated for the third month in a row to 2.9% in December, and core inflation, which excludes food and energy prices, slowed to an annual 3.2% from 3.3% in November. The annual overall rate of inflation accelerated from 2.7% in November, largely because of an increase in energy prices from a lower base in the previous year. Wall Street indices advanced after investors focused on the direction of core inflation and overlooked the fact that prices are still rising at a faster rate than the Fed's target rate of 2%, and that also from a higher base, meaning consumers are still feeling the pinch of inflation in the nominal prices. On Tuesday, the statistical agency said the annual producer price inflation accelerated to 3.3% in December from 3% in the previous month, and the core rate of inflation, producer price inflation, advanced to 3.5%. Two separate inflation reports have been closely watched by investors after non-farm payrolls expanded at a faster pace of 256,000 in December, confirming a strong jobs market and supporting the case for the Federal Reserve to slow or maybe even eliminate its projected rate cuts in 2025. China's GDP expanded at an annual pace of 5.4% in the fourth quarter, faster than 4.6% in the third quarter. The economic growth was the strongest in 6 quarters, boosted by a surge in exports and aggressive stimulus, but market sentiment was tempered by the lack of clarity in implementing additional stimulus measures. For the full year 2025, China's economy expanded at an annual pace of 5%, matching the estimate set by the central government, but slower than 5.2% in 2023. China's annual GDP growth is expected to slow to close to 4% in 2025 and decline, or rather slow further, to 3% over the subsequent 2 years. India's consumer price inflation slowed to a 4-month low, but still near the upper end of the target range set by the Reserve Bank of India. In other economic news, China's exports and trade surplus soared in December and 2024. After shipments surged ahead of possible U.S. tariffs and trade barriers. China's retail sales growth in 2024 slowed sharply to 3.5% in 2024 from 7.2% in 2023, and new home prices continue to fall for the 18th month in a row in December. In Europe, Germany's GDP contracted for the second year in a row amid persistent weak domestic demand and slowing export growth. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury hovered near 4.6% and eased from a 14-month high on Tuesday after inflation reports suggested possible weakening of pressures on the prices. Texas crude oil prices edged higher by 2% to $78 a barrel and advanced for the fourth week in a row, driven by concerns about U.S. sanctions on Russian energy supplies to India and China. Natural gas prices in Europe advanced 3% to 44 euros per megawatt hour amid steady supplies despite colder weather conditions in the region. The euro dropped below $1.03 and traded near a 2-year low as traders speculated a gradual implementation of tariffs by the incoming new presidential administration. The yen strengthened to 155 after Bank of Japan Governor Kazuo Ueda and Deputy Governor Rizo Himino signaled a possible rate hike at the next policy meeting next week. We now shift our attention to major stock markets in the US, Europe, and Asia. The S&P 500 index and the Nasdaq composite registered their first weekly gains after inflation reports suggested waning price pressures. European markets extended weekly and annual gains after policymakers reiterated their commitment to lowering rates in the months ahead. The Nikkei 225 stock average struggled to advance amid rising speculation that the Bank of Japan is ready to increase rates sooner than previously anticipated. Hong Kong and China indices rebounded from the previous week after China's GDP growth matched expectations and investors held out for clarity on additional stimulus measures. India market indices closed lower amid rising outflow of foreign investors following the rise in bond yields in the US and Europe and mixed earnings results. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Goldman Sachs, Morgan Stanley, Citigroup, Bank of America, and J.P. Morgan Chase reported higher-than-expected fourth-quarter earnings, largely because of higher investment banking fees and fixed-income trading revenues. Target Corp, the big-box retailer, raised its sales outlook but left its earnings range unrevised for the fourth quarter after promotions drove sales in the holiday period. United Health Group reported mixed quarterly results and said the medical care cost ratio increased to 85.5% from 82.3% in 2023. Apple Incorporated decreased 4% after the company lost significant market share in China and dropped to third place in 2024 from the top in 2023 amid rising competition for its premium phones from domestic companies such as Huawei and Vivo. Richemont, the parent company of Cartier, reported a double-digit sales increase in Europe, the Americas, and the Middle East in the fourth quarter, sparking a rally in luxury stocks in Paris and Milan. Signet Jewelers plunged 15% after the retailer lowered its sales outlook in the fourth quarter, citing a decline in comparable sales during the holiday period. JD Sports Fashion issued an earnings alert, but Ocado Group reported a 17% surge in revenue in the fourth quarter. Both retail companies are based in the UK and they reported diverging sales trends. Reliance Industries, an India-based diversified conglomerate, reported December quarter earnings advanced 7% to a whopping $2.5 billion amid stable petroleum refining margins and an expanding network of retail stores. In the week ahead, Wall Street investors are awaiting the release of earnings from Charles Schwab, Netflix, Procter & Gamble, Johnson & Johnson, Abbott Labs, General Electric, Union Pacific, and American Express. In Europe, investors are looking forward to the release of business activity surveys in the Eurozone, Germany, and the UK. Passenger car registration data is also scheduled to be released, and hybrid car sales are likely to confirm the recent demand trend in December. In Asia, the Bank of Japan is likely to lift its benchmark rate by 25 basis points, and the People's Bank of China is expected to hold steady its loan prime rates. In India, the Reserve Bank is set to release foreign exchange reserves data, and investors are looking to track manufacturing and service sector activities updates. You can review daily U.S. global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rudera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see